In the past few months, the home loan market has been rocked by a series of rate hikes thanks to efforts from the Reserve Bank of Australia, RBA, to stomp runaway inflation. As a result, property prices have fallen in 80% of Australian markets as the cost of financing a home puts off new buyers. Experts from the Big Four banks predict the dust will settle with an official cash rate peak between 3.10% and 3.85%, so getting there means even more rate hikes loom on the horizon. RBA rate hike movements, play-by-play. To reach the terminal rate early next year, Westpac forecasts a hefty 50 basis point rise in November, followed by smaller tightening 25 BP moves in December, February, and March as the central bank wrings inflation out of the system. Headline inflation clocked in at a worrying fast 7.3% between September 2021 to 2022, which Westpac believes will force the RBA's hand. These cash rate moves would put the cash rate into contractionary economic territory at 3.85% by March 2023. ANZ similarly believes the cash rate will hit 3.85%, but not until May 2023. CommBank and NAB forecast a more dovish approach, with 25 BP rises in November/December bringing the terminal cash rate to a rest at 3.10%. Either way, we will be fully in the throes of a slowing and mortgage-stressed housing market by the time we reach the top. But could these predictions spell something worse for the economy? Everyone's anticipating variable home loan interest rates will go as high as 6% to 7% right now, and it's certainly not out of the question, explains Mozo expert spokesperson Peter Marshall. Someone with savings and no loan might be cheering that idea, but there's plenty of risk in the world economy at the moment, so I don't think the Reserve Bank's path is as clear as they think or say it is. According to Marshall, the primary danger is overdoing it. If the RBA hike rates too fast, they may well just cause everyone to close their wallets, stop spending, crush the housing market, and we could be in a recession next year. Trouble may already be brewing as mortgage repayments rise and borrowing power diminishes. If mortgage holders begin defaulting on their payments, the Australian economy will be in serious trouble. This will force the RBA to slash the cash rate and undo their tightening efforts in favor of an emergency boost to the economy. While there's no fixed certainty the economy will tank, the risk lingers behind every bold move from the RBA, especially since inflation has been driven more by supply-side disruptions than the usual suspect, consumer demand. What we can see right now says rates are going up for a couple of years, comments Marshall, but I don't think it's a done deal. In the meantime, with the cash rate currently resting at 2.60%, mortgage borrowers will continue watching the RBA with clenched teeth and bracing for further hikes. Those hoping for a reprieve just may be disappointed for now. An era of rate hikes has its advantages, if you know how to lean into monetary policy, and there are plenty of great strategies you could take for keeping your mortgage within your budget. So roll up your sleeves, it's time to get proactive. If you already have a mortgage, get an offset account, and fill it up. While more common with variable home loans, an offset account could save you bundles on interest. Compare interest rates, and if you find something better, refinance. If you're in a position to refinance, comparing what's out there could clue you into deals with better rates, features, and support. Climb aboard the savings train. Home loan rates may be up, but thankfully, so are savings accounts. In fact, according to Peter Marshall, the term deposit war has only just begun. If you're considering making the switch, you could start by comparing these high interest rate savings options. If you're looking to buy property, let the government help you out. Every state in Australia has first home buyers grants and schemes aimed at improving access and affordability. On a national level, the Labor government has also announced its new Help to Buy scheme. Show lenders you're a good bet. Lenders aren't keen on approving applications from risky borrowers, so if you can, take steps to pay off your debt, save for a bigger deposit, and be mindful of your credit history. Walk into the auction with your head held high. High interest rates cool competition at auctions, so sellers may be more willing than you think to privately negotiate a price, and accept lower offers than normal. So if house prices have fallen in your area, the ball is in your court.
Data shows that 80% of people watching my videos are not subscribed.
Remember, subscribing is free. It only takes a couple of seconds and you can unsubscribe at any time. Please help me and my channel by subscribing. Now back to the video.